acquisitions can't get done in the senior housing market without debt and equity. And to talk a little bit about what's been going on and some of the private equity coming into the market, I have Patrick Hurst with me today. He's a managing director at Houlihan Lokey and has been involved in some of the large transactions of late, even though there have not been that many, but it's picking up, and he's been kind of at the center of at least one big one. Patrick, we've seen two large private equity firms, Blackstone and KKR, make bids in the seniors housing business in the second half of last year. What's changed in the market to bring private equity companies back to the sector after a 2-year absence?
I think there's a couple of things, not the least of which is when the private equity look at their other portfolios and under other industry sectors. I think what they found out is, in looking at it, that the healthcare in general, although it's not recession-proof, it's definitely recession-resistant. And when they look at the different spaces and see how it compares to maybe the retail or the industrial or other areas, healthcare has really held up well. And I think and if you break it apart on the assisted living side, I think there was an expectation and fear, frankly, that was more discretionary and very little demand-based. And I think 2 years ago you saw a quarter where the occupancy started to dip, and people thought that was going to be a trend that continued. And then a lot of the operators held on to occupancy, studied it out, and actually started to increase slightly. And so that when you see from some of the private equities, they look at that and say that's a market segment that held up nicely, that they really didn't have the occupancy declines as was anticipated. And then when you get further behind it, you can see that a lot of the operators aren't doing deep discounting, so some of it's true occupancy steadiness and increases. And then when you look at that compared to other sectors, it's a good space.
And how much in these two situations with KKR and Blackstone, I mean, how much do you think was a perceived value opportunity to come into a distressed situation?
Well, and I think that the two you're referring to, obviously Blackstone's obviously looking at SunWest, and KKR looked at Erickson. They're both different in terms of their attributes, right? Erickson had a name recognition and had some quality attributes that people were driven to. SunWest is size and ownership, right? Their own facilities, and I think that was attractive. So when you look at that, I think both of those have their different attributes. With an equity shop the size of those two firms could get behind and actually expand upon and frankly do some things with. So I think that it wasn't as much as they were distressed that brought them to it, but that there was opportunities. Okay. And SunWest and both, when I say that, but it was also opportunities for improvement in their operations, right?
Right. And are there other large or medium-sized private equity firms sniffing around the industry? And if so, what are they looking at? What are they really looking for?
Mm-hmm. Yeah, there is. And we keep track of all the private equities that have any healthcare, that have both their real estate, that have a healthcare. We're constantly talking to them. And I think what's interesting, if you look at both the two we just talked about, they both came in with a partner. Or, you know, whether Emeritus with Blackstone or KKR teamed up with Coastwood and Beacon Petty. So they did come with some operational experience, which I think is important on portfolios of that size, and I think they thought that was important. In talking around the country, the interest in the private equity is on the large scale, like in the KKR and the ones that we mentioned, because they can put a lot of dollars to work. And some of the issues in healthcare, frankly, is for some of the bigger funds, they just can't find opportunities to put the level of equity that they need to in a deal.
Right.
Okay.
And you recently worked on the Erickson restructuring and ultimate sale, which is still hasn't closed. Was there one main thing that attracted the bidders to that particular property?
I think there was attraction, and there was also a little bit of, that was such a unique asset in terms of its complexity. In terms of a CCRC, right? That's something that most people weren't aware of.
And unusual CCRC too.
And
unique.
Unique, very unique in terms of its structure, in terms of looking at it. And I think what the attraction there was the name recognition, the platform, to basically do some of the improvements, and then what can be done off of that. And for some of them, frankly, it was a bit of a mission based. They thought that was a need. And it would serve the segment of the market that they felt good about and thought there was sustainability there.
Okay. And now that we have, hopefully have these two major kind of restructuring sales are soon going to be behind us, Do you see anything on the horizon in the seniors housing M&A market? Is there anything, like that looming? Any big asset sales coming up, or is it going to be pretty small stuff?
No, I actually think there's going to be some big plays coming up. And if you break senior housing, both in terms of on the assisted side and on the skilled side. So I think that there is a lot of movement. There's a lot of contemplation. There's people who've been in things for a long time and might see an exit opportunity. I also think because of the amount of debt, frankly, that's going to come due, both by just natural when it was done, it's coming through its cycle in 11 and 12, that it's going to have to be refinanced, as well as there was a lot of, frankly, what we were doing for the last year or so was doing amendments and waivers that had a 1 to 2 year. Mm-hmm. So what you're going to see is there's going to be a natural coming to market as a focus of just some of the refinancings. And historically what happened is there wasn't any equity in the market and there wasn't a lot of debt, so there wasn't an alternative to just hanging with it. And what you're going to see now is, since there is some equity in the market and people are looking at it, the natural weight of the market is going to bring some things out. And I also think because of things we talked about on the attributes of the market are attractive. And I think one of the things that we hear when we're out talking to private equity, as well as even mezzanine players and a senior, is there's a recognition in the market that there's not been a lot of new construction. So there's been 2 years where there really hasn't been development, and if there's not development now, you're another 2 years away from, and so you don't need a lot of demographic changes. They could even stay flat, but you're just going to have, there's going to be a demand there because of that. And I think that's a differentiating point from the last time that maybe the assisted went through a bit of a restructuring, was it was because of overcapacity.
All right. Well, I hope things heat up a bit for both you and me. So good luck in this year, and hopefully we'll have an active 2010.
Very good.
All right, thanks.
Thank you.